What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So this past month, again, I made $7,069.12. Yes, these are with ETFs, but I need to enhance my dividend portfolio. I'm going to be starting to add high yielders very soon. Looking at either mid-July, early August. But these three are going to be integrated into my high yield dividend investing philosophy. These are business development companies. They have a very good reputation, and many of you probably have been buying them. Actually, I'll add 4. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these 4 business development companies right now. Before I even start, business development companies, 90% plus of what they make go back to investors. So that's one thing that you have to be aware of for tax purposes. Rule of thumb, if you make 900 in dividends with, for example, Hercules Capital, you have to report it as 900 in income for income. So 900, you make 900, you got to report that for taxes. Obviously, if it's in an IRA, different story. But really, why would you? My philosophy with my IRA, I invest in stocks or ETFs to either be in line with the S&P 500 or beat the S&P 500. So I have no reason to add a stock like Hercules Capital, like a business development company like Hercules Capital. So this is one of my favorite business development companies. We have a dividend yield of 11.67%. The most recent quarterly financials, it's up 18.43% year-to-year revenue. So again, that's a good thing with business development companies. If they're making money, that's good, especially if the revenue is up. That usually helps with the dividend, not always. But again, with its dividend yield of 11.67%, you got to be very careful studying the trends. Revenue, earnings reports, you have to see what type of companies they have. So with higher yielder, you got to do more digging. Now, again, you have to do your due diligence, but this is one that I'm going to be buying for my dividend portfolio. I love it. I've owned it before, and it distributes some really good dividends, which I'll reveal to you. I'm on stockanalysis.com, and with a high yield, sometimes you don't get the dividend growth. So I like using stockanalysis.com as a reference with the dividend trends. So August 2021, again, quarterly distribution, 39, 40, 48, 51. Then in March 2023, 47, 48, 47, and it's stagnant at 47. So yes, there's a high payout ratio. You're going to get that with business development companies. Now, is the dividend safe? I'll go over that with you. So you see the dividend growth going down. It's a little bit volatile right now with business development companies. So you have to be really careful with putting the finger on the trigger. For example, I was in Horizon Technology Finance, HRZN. They're doing fantastic. Now they're doing terrible. They're at risk of a split, possibly, their share price. So you have to do some really in-depth digging. So I'm going to jump to the dividend safety. I did some digging with some AI and looking at some things. So again, right here, because BDCs are legally required to distribute 90% plus of the taxable income to shareholders, the payout ratios are normally high. So again, I explained to you what BDCs have to do. Now, it's supported by a robust net interest income and a healthy dividend coverage above 120%. The regular quarterly dividend is rock solid, while the supplemental portion relies on excess spillover income. That's according to Wealthy Retirement. So I use them as a reference. So when I do videos, I like to use people as references. They deserve credit. When people just post things, I like to say who they are. So that's one thing that I like doing with my YouTube channel, is giving people credit for making life easier for us. So we have the dividend there. We have the dividend yield. Here's some information on them. Let's jump to the next business development company. Now, this is one of my favorite business development companies, Ares Capital Corporation, ARCC. This one has survived a long and tumultuous. Here's the recession. Here's the pandemic. So it survived a pretty rough time. And it's sitting at 1873. So this is kind of like, if you look at the cream of the crop, they're like the Seattle Seahawks that just won the Super Bowl. They're one of the best business development companies. They are a champion. They survived. They advanced. Okay, they survived right here and advanced. 2009, look at that, $3, and it survived that. Survived 2020, it did well. So they are the cream of the crop. They're the top echelon. They're the Mac Daddy of the business development companies. That's the best way to say it. They're the top one. Everybody loves this. You'll see numerous investors praise Ares Capital Corporation. Many people have done YouTube videos on Ares Capital Corporation. They are the top notch. They have the title. I will say they're probably the best business development company. Revenue's been really well, and its dividend history is pretty good. I'm on stockanalysis.com referencing Ares Capital. I see a quarterly distribution, 41 cents, 45, 46, 51, and then 48. It's stagnant right now. I'm okay with that. Again, these are not the top priority of my dividend portfolio. Yes, they're going to be integrated in my dividend portfolio. But when I'm looking at winners, like dividend growth, that's what I really want long-term wise. But again, this serves a purpose, because if I get 400 shares of this one, Hercules Capital, and then this one, and then the other one, but this one I'm going to discuss, Capital Southwest Corporation. This is another business development company that is strong. This one has been there before. This is one, for example, we're looking at FIFA. This is like, those teams that have been always in the Elite Eight, Final Four, making, not always winning the championship, but they're always there. And Capital Southwest, CSWC, is one that is a strong business development company. And look at Prospect Capital right here, 224. That looks like a disaster right now. And we've said for years, PSEC is a joke. It's not strong. Look where it is. And look where Capital Southwest Corporation is, 2373. It's doing pretty well as a business development company. It's standing strong, and it has a pretty good dividend history. And again, you see the distribution of Capital Southwest Corporation, 2021, 54 cents. You have a special one right here, 97, then 48, and then 57, 59, 62, 63. And all of a sudden, it became monthly. So you have a monthly distribution right here with Capital Southwest Corporation, which is exciting. Now, the one thing you have to be very careful with, okay, it does have a high payout ratio, and the dividend growth went down. And the growth per year is past 3 years. You have to be very careful at looking at some of these that have been quarterly and changed to monthly. So there can be red flags with them. This one seems okay right now. So again, you shouldn't be buying things because I'm buying things, but I really like this one. I've owned this one, and it's done really well. And I'm going to jump to the final business development company. Now this one's down a little bit, and this one is a very interesting business development company. This one so far looks a little strong. So I'm going to continue to buy this one when the opportunity arises. And I will be buying Blackstone Secured Lending Fund sitting at $23.77. So this one has a pretty rich tradition as well. The distribution is high, which is very attractive for me. So if we look at 2021, 53 cents, then this took a little bit of a hit. Then it jumped to 53, then 60, then 70. It's at 77, a little stagnant. But it's doing okay so far. And that's a good bang for your buck right there for a business development company. So these four will be integrated into my dividend investing strategy either between mid-July and August. I don't know if it's going to be the last week of August, or I have to look at these numbers and go from there, but these are going to be integrated into my dividend investing strategy. Now again, I want to get to maybe 1,000 shares of XQQI in the future. So that's one strategy that I have with XQQI. I want to get a lot of shares of OVL. But I can also use the dividends for the business development companies if I get to 400 shares, start putting money into XQQI and OVL, and then use their dividends to buy dividend growth stocks. So that's a strategy that I have in mind to really turbocharge my dividend portfolio and make it a lot more stronger and a lot more powerful. But again, 7,000's I'm not too excited about that. I don't know about the consistency of the dividend portfolio. So I have to really think about strategies with my dividend portfolio. Now I have time. I have a better work-life balance. I have more time to really think about these strategies. I have more time to start being in YouTube collaborations. And someday I plan on being with my buddy from Canada. So you'll see me probably Sunday being live. I want to really discuss Canadian dividend stocks because there are some really good Canadian dividend stocks. And we're going to really go over that with the dividend investing strategy. I'm going to talk to Dave and go over that. So I'm very excited to be back in the game with this YouTube channel because I kind of fell off. And now I have time. Now I have the energy. Now I have the focus to really go back to where I was back in 2025, at the start of 2025. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. And again, don't use my YouTube channel for financial advice. Don't use it for tax advice. I have a disclaimer in the beginning of the video. Take care. And I hope you guys have a great rest of your Sunday. And go USA, beat Belgium.